I know, it's an exciting topic, you guys, I know. Good evening, fellow Toastmasters, honored guests, anybody else who may be here. I will try not to phase you with all the information I will be covering this evening, but I'm actually dealing with a transaction right now. That's a FHA file, and that's actually what came to mind to talk about today, not motorcycles, I'm sorry. FHA loan. The government gives people the opportunity to use a loan for either buying a home or refinancing a home. It's FHA, Federal Housing Administration. Does anybody know what the down payment normally is for an FHA loan purchase?
20%?
20?
30.
You'll love that number then, because you guys are going with higher numbers. Look at this. 3.5%.
Really?
Yeah. With an FHA loan, the government allows you an opportunity to buy a home with a minimal down payment, 3.5%. That's per, if you look at 100,000, that's $3,500 for every 100,000, right? It's not very much money at all. Now, because it's an FHA insured loan, anybody can come up with that down payment. So let's just say you don't have the money for the down payment. Well, let's say you have a brother, a cousin, an uncle, a good friend. Anyone can give you the money as a gift as the down payment for a purchase of a home. Now, you guys think that's pretty low? 3.5% down?
Yeah.
Yep. How about if I said you can get in for less than that under FHA?
It sounds pretty fishy then.
Sounds pretty fishy, huh? But it's real, okay? Like I said, I'm not gonna phase you today. 0.5% down. 0.5% down. How much is that now? On $100,000, how much has to be your money?
$500.
$500, right? $500 to get you into a home under FHA. Per 100,000. So if it's a $300,000 home, you're looking at $1,500, which again, could be a gift, right? Now, for 0.5% down though, there's income requirements. And usually it's about $50,000 for a family of 4. Which is probably everybody, right? I mean, most people, what's most people's income these days, really? The average person, what is it? What is it?
60,000.
How much?
60, 70,000.
That's average, you think? Do you think that? That sounds a little high, believe it or not, statistically, right?
40.
Yeah, I mean, 30 to 40 is like the average. Yep, pushing 50 is like pushing it. Yep. So most people would actually qualify for the 0.5% down. Most people, family of 4. I think it might be even up to 60,000. Now, FHA still requires 3.5% down, but you're going to put in 0.5% down. Where's the other 3% going to come from?
The government.
The government, very good. The government will finance the other 3%. It's a silent second. You don't have to make payments on it. It's not due until you either refinance or sell, or pay off the original loan, which is 30 years down the road supposedly, right? Now, what if the home has damage? You ever seen homes where they say, hey, I want to fix that home. It's a fixer-upper, but I don't really have the money, right? If you're not buying it cash and the home is destroyed or needs a lot of repairs, how do you get a lender to loan you the money to buy a home that needs repairs? Well, FHA allows that again. Good old FHA, huh? They have loans that you can kind of attach to the primary loan for repair, what they call repair escrows. So one of them is 203K, that's called repair escrow. If the repairs to the home you're buying is $5,000 or less, you can do what's called a repair escrow. They will just set aside $5,000 and they'll front it to the contractor once it's closed to do these repairs. And once the repairs are done to standards, right, then they send proof to the lender, which in turn sends it to FHA, and that's that. Now, what if there's repairs that are more than $5,000? Are you limited to that, or can you go higher?
You can go higher.
You can go higher, right? There's something called 203K. With a 203K, you can actually do repairs, and it depends, because I've seen different numbers. 35,000, 50,000, so don't quote me on those numbers, but for sure 35. But I know I've seen 50 somewhere else. All right? For a repair escrow, some of us in here probably have worked on homes before, right? We've done stuff here and there. If you're going to do work on a home, what do you normally need?
Depends on what your plans.
Plans will be one, right? What else?
Contractor,
Contractor, right? That's a biggie, right? What does a contractor have to have?
license,
License. What else?
bond,
Bond. What else?
knowledge.
Knowledge, obviously, huh? Insurance to back them up, right? Insurance. So, with a 203K, you can go up higher. We're going to say in this case 35,000. Now, here's the interesting thing. Just want to make sure I don't miss anything. What if you don't qualify on your own? Let's just say it's husband and wife, you don't qualify. You still don't make enough, but you still have this dream home you found, you want to do it. What do you do? What do you do? Come on, nobody's...
Save more money.
Save more money, but if you don't have that option. Because I've had people tell me, I'm going to save more money. Okay. How much can you save per month? 100, 200. All right. In a year, what is that? 2,000 bucks. And if homes appreciate at 20,000 bucks, are you more ahead or are you behind?
Behind.
You're more behind, aren't you? But what can you do if you don't qualify and you can't save more money, you don't have the time, you want to buy it now, what can you do?
Rob a bank.
Yeah, that would be an option. Not really.
Partner with someone.
Thank you. Co-borrower. A co-borrower. So let's say you go in with your brother, your sister, and your spouse, let's say, or, as you say, a partner. Hey, a friend, let's go in together and buy this thing. Okay? FHA allows that. Now, what if they're out of state? Can they still be used as co-borrowers to purchase a home? Yeah, they can. They can. Now, do the co-borrowers have to live in the home? No, they do not. As long as they qualify, they can live anywhere in the country, and they can co-sign for you to be a co-borrower for you at your home. Now, FHA allows for purchase loans. We talked about that right now. It also allows for refinance loans. So if you have a home, you want to refinance it, change the terms on your current loan. Now, why would somebody use an FHA loan versus a conventional loan? What do you guys think are the reasons why someone would opt to have an insured loan through the government versus a regular conventional loan? What would you think would be some of the factors that would push you towards FHA?
Interest rates.
What's that?
Interest rates.
Interest rate potentially could be more favorable, right? But actually, FHA is a little bit more flexible on their lending guidelines. So your FICO scores could actually be lower. We could actually go all the way down 620, 600, 580. We have some lenders that go down to 500. Where conventional lenders, they want to see 640, 660, 680, 700 on your credit scores. So that's one way. Another way is, or another reason is, because the guidelines are more flexible. So let's say you only make $4,000, it would limit you to a purchase price under conventional of this amount. But you can take that same $4,000 and it allows for higher ratios, you can buy a home that's more expensive. So the ratios are more flexible, the guidelines are more flexible. How about this? If someone has no credit score, can they buy a home?
No.
Hey, that would be like the typical answer, absolutely. Now, by themselves, no, you are correct. They cannot buy a home if they have no credit scores, cannot buy a home. But what if they partner up with somebody who does have credit scores? Then you can. As long as a primary borrower has credit scores, you can have no credit scores and still qualify. Now, if you have bad credit, can you purchase a home?
It's really hard.
High interest rate.
Yeah. You'd probably have to put a big down payment. You'd probably have hard money. You're going to pay high rates. You're not going to get an FHA assured loan. You're not going to get a conventional loan. You're going to get hard money, investor money. But you can still do it. But you're going to put down like 30%. Yeah. One last thing, because I know I'm already out of time. I should have said 17 to 19. Just kidding. But in order, do you guys know what MI insurance is? MI? Or PMI, as some people call it?
Private mortgage insurance.
Right, mortgage insurance. That mortgage insurance is charged to the borrower if you have less than 20% equity in the home. So if you buy a home with less than 20% down, you're going to pay mortgage insurance. Now, once it gets past 20% equity, refinance it, get rid of the mortgage insurance, and you're good to go. All right, with that, I know I'm out of time, so I appreciate your time on this. I hope it was educational. I look forward to bringing some more information another day.